Hello again from Sprott Money News at sprottmoney.com. Oh my goodness, we are in the second half of the year 2024 now. It is July, and it is time for your monthly precious metals projections. I'm your host, Craig Hemke. Joining us as usual this month, Chris Vermeulen of thetechnicaltraders.com. It's time to take a look at the metals. Chris, how are you today?
I'm good, Craig. How are you?
Just hanging in there. It is, like I said, it's July. Please don't forget about the precious metals. It might be holiday time. It might be, time to take a vacation. I don't know. But it is never time to stop stacking. In fact, Sprott Money makes it very easy this month to save a massive amount of money on your next order. Just simply refer a friend, as you can see on the screen here. Current program, refer a friend, save up to 500 big ones on your next order. That's almost a tube of Eagles. Pretty close. So refer a friend, save some money. Again, sprottmoney.com, or you can call them at 888-861-0775. Okay, Chris, here we go. As we wrapped up the month of June, the last bit of podcast and video we had, I had the monthly wrap up with Michael Oliver, who I'm sure you know. I know many here have watched that video, or maybe they're just hearing about it the first time. They want you to go watch it. We covered three markets that he said are going to have some significant moves here in the third quarter. So let's start. Let's start with the stock market, because he was pretty emphatic. I spoke to him on my TF Metals Report side too. He was pretty emphatic that the third quarter, not the fourth quarter, the third quarter is going to see a rollover in the S&P, maybe not a crash, but certainly a significant pullback. What are you seeing for stocks in general, my friend?
Yeah, I think him and I are on the same wavelength when we talk about the markets. I believe if we kind of look at the long-term chart, this is the weekly chart of the SPY, which is the SP 500. I think we're getting up into this nosebleed section where we're going to see the markets have a much larger correction. You and I talked about this last month in this same update, where a lot of things are coming together. We've got gold trading near all-time highs, energy stocks near all-time highs. We're seeing industrials. They're doing very well. And all those things tend to come together when the stock market gets frothy and overbought. And we're starting to see unemployment pick up speed. So there's a lot of things coming together that are telling us, hey, the music is about to stop. Other than the big tech and the AI camouflaging what's actually happening in the stock market, I believe the technology is dragging the markets higher. And because we're seeing, the Dow and the SP 500 and the NASDAQ at all-time highs, people think, this market is really strong. And yes, it is moving up. But when you look at, for example, small cap stocks like the Russell 2000, I'll just flip to the monthly chart so we can kind of see the view here. The Russell 2000 has been nowhere near the highs. It's struggling.
Yeah.
I believe it's going to go off a cliff. Equal weighted SP 500 is really just flirting with all-time highs. When you look at the micro cap sector, they have a very bearish pattern like the Russell, and same with even the Toronto Venture Capital Stock Exchange Index in Canada is very bearish as well. So, other than big techs making the masses think this market is strong, really there's only like 5-7 stocks holding the whole market up. And once that bubble kind of implodes, it's going to be a pretty big correction. So I do think this is the monthly chart. I do think fourth quarter this year, I don't know when exactly the market's going to top out, but I do think by the end of this year, the markets will have topped out. And then the question is how far does the market go, and how precipitous is that fall? Is it going to be like a 2008, like an 8-month like waterfall sell-off and then sharp rebound? Or is it going to be like a 2000 tech bubble that takes 3 years of constant selling, dragged out over more time, and take a lot longer to recover? So I do think equities markets are on that last leg. We're still long the markets. We continue to ride them higher, but knowing the end is coming definitely it's good to know mentally and be mentally prepared to like exit those positions with stops or targets, or move our stops up as things continue to mature.
For people that are kind of on the edge of their seat, if like you said, you're long, but you're kind of cautiously long. Are there levels in that SPY as a proxy for the S&P that you'll be watching? They're like, oh, okay, we got to start getting cautious here.
Yeah, we've got like when we look at our strategy, we've got a few levels here. We've hit a target already. We've got another target somewhere up near the 600 mark that we could continue to see the SP 500 move a little bit higher. So the markets are still showing us some good strength. And I do think, sometimes, as you know, Craig, some of the biggest moves happen right at the end of a trend. You either have
Right.
like a capitulation rally and everybody jumps in and you see a quick vertical spike, or you see a washout low where everybody bails out and stops get hit at the same time and it goes straight down. We could still see a very strong pop and rally in the SP 500, in the NASDAQ. I do think if it happens, it'll be very short lived. And generally, if we see that, what goes straight up usually comes straight back down, those emotional moves, and it can put quite a bit of damage to the chart in terms of it might consolidate, but then start a
Yeah.
much bigger washout. So we've been waiting. You and I talked about this even last year. I'm like, I'd love to see the SP 500 hit new highs. I'd love to see waves of distribution selling start to happen. And we have seen many days where big volume selling hits the markets. They're not frequent, but they're there. And the whole market's driving higher really on a handful of stocks, telling us the market is not a broad market rally. It's just
Yeah.
drifting higher. So it's a very weak. This is to me, it's like a false rally, but we're still taking part of it because higher pricing is an opportunity still. So
Before we get to gold and silver, I'm going to throw you a little bit of a curveball and have you take a look at the GDX because, well, a lot of different things going on in the mining shares, obviously.
yeah.
But keep that monthly chart up, if you will. On
Okay.
my side, I like to call it the mother of all penance. If you draw a line from that peak back in 2011, go all the way back to 2000, draw it down to that peak in 16. All right. Now draw one up
In
from the
16
lows.
down here.
No, the peak in 2020, I think is
Okay.
what that is. Yeah.
Sorry.
All right. Let's put that line on there. And then go back to the lows in early 2016 and draw a line up, catching most of those lows. Maybe not that. Yeah. You're right in there somewhere. Yeah. What do you make of that?
Yeah, definitely it's, if I could just pull this
It's
up here.
trying.
Yeah, it's definitely squeezing in there. I mean, I would say, this we had a huge correction here. I would say this is kind of like a basing, a rounding, bottoming formation, which it
Yeah.
had broken out of. And of course, this range now it's just really kind of flirting through this level, trying to find that consolidation. So you could say that this is maybe like a cup and a really big sloppy handle.
Yeah.
But it is definitely, the series here. We got rally, pause, rally, pause. To me, it's stair stepping its way up. Again, this is the monthly chart, as you said. Like, look how many, like
Mhm.
these are years across the bottom, not months. So this could still unfold, but it is very close to wanting to break out and run. And I think there is upside for GDX to go back up to 40, maybe 44, get up to these highs. There is that upside. I do think, if we have big selling later this year, it's going to struggle and pull back.
Yeah.
But once we have that big pullback and that reset, I think gold miners are going to be an awesome play again. So right now to me, they're just a trade. If they pop and break out of here, which, like, if we go to the daily chart's not the sexiest looking chart. You could argue here it's trying to make maybe a bit of a head and shoulders pattern.
Yeah. Yeah.
When we look at it here, we've got a shoulder, we got a head, and potentially a shoulder and a sloping up neckline. So if this does start to break the neckline, it's going to start to like have multiple waves, a pretty good reset in price. But with that said, the reality is it's a nice move up. It's more or less kind of consolidating. And I
Yeah.
would like to overlay that with the gold chart. When we look at gold, it's a very
Let's go
similar
there.
pattern, right? So I believe it's doing the same thing as gold. It's just stocks and silver are more volatile. So they usually have a bit messier of a chart. But I believe it's a bull flag, at heart behind the noise.
Well, yeah, let's go to the metals as we wrap up for this month. Gold is to me it looks like it's consolidating after you could say, well, that was a double top, but it hasn't broken down through 2300 either. So it almost looks like it's in kind of a bull flag kind
Yeah.
of square range. What do you think?
Yeah, I mean, I think gold has got a beautiful chart pattern. I was actually really hoping over here about a week and a half ago, I was hoping we were actually going to see gold move down a bit. I wanted to see it break these lows and
Yeah.
this low, just because it was going to run anybody who's got a tight stop. It was going to
Right.
flush them out of the market, create a little bit of a shakeout or a fake out, and then go and take off and run higher. And it still might do that. We could still see it consolidate and chop around the market. If it doesn't shake you out, which it did not do here, it will wait you out and take way longer than you ever anticipate. And then sometimes it'll do both, and you can get burned twice through the whole process. But we are in this pause. Silver's doing the same. I believe gold miners are doing the same. I do think it'll resolve to the upside. So it's just a matter of time at this point. This is a very strong chart pattern. The only thing I don't like about it is crystal clear, and everybody's looking at it,
Yeah.
which is not a good sign, because then everybody's long and just waiting. And that
Yeah.
means if they're long, there aren't that many buyers ready, which is why I kind of wanted this shakeout here because then you'd say, okay, well, we have a series of lower highs. We have a series of lower lows. We broke this low. That'll scare people. And we probably see a big spike in volume. And then as they all spook out of it, then it takes off and wants to go higher without them.
Yep.
So the market still might want to do that. And that's actually a good thing. It'll reset the hands, the shares into strong, or ounces into strong holders for higher pricing. So
If you would take a second too and look at the monthly chart, because I was just talking about this in my Friday podcast on my site. And I remember, I think it was 2 months ago, maybe 3, where you did some Fibonacci extensions, because we're in this area of, I mean, it's unprecedented, right? COMX gold futures never been up here at 23,000, 2,400. So how do you look, if you do break out to the upside, I don't know, later this summer, this fall, or whatever, what kind of targets come into focus next? Could you go through that again, please?
yeah, sure. So we could look at it a few different angles. So we could look at just this last rally here in this tight bull flag. So if we were to go from the recent low to the high and down to the low here, that brings us up to roughly 2760, 2750 area, which you and I have talked about for a while. I've had that target for some time. We can go back to a kind of a bigger picture here, a bigger trend. We can go from here to here, and it had this pullback. We can carry that forward. This was the first run. So this is where we saw the first rally, the first consolidation. It came up to the 618. And my theory has always been, if it hits 618 and pulls back and pauses, we almost always go up to that 100% measured move, which we've done. So that was the first one that unfolded. This next chart pattern is saying, hey, we should go to 2580 and then 2760. And if we were to look at the kind of bigger picture, even, let's just, whoops, I'm getting messy here. We can go all the way from the lows back over here to this bull flag top and down. This carries us forward to about 2660. And this is the range that I have been talking about, and I believe is going to get hit here over the next potentially 2 or 3 months. I believe this is the sweet spot, 2650 to 2750. And from where gold is right now, as you and I are talking, that's roughly 12 to 16% to the upside. So there's some very good upside potential, and it's based on this short-term pattern. I know it's kind of tough to see on here, but this really explosive move right here, that did that in technically 3 bars or 2 bars, that whole move. So we are potentially 2 to 3 bars away from hitting 2750, which is 2 to 3 months, which falls in line with seasonality of the markets, of how everything to me is unfolding for stocks and other things. So I'm very excited short term for gold. The caveat here is, I think when we do see the stock market starts to struggle later this year, we could see gold unwind and come back down into this range again, just because of pure selling pressure, margin calls, and things like that. But I do believe, we are in this super cycle to the upside for gold, that over the long run, when we look at the big picture here, it is going to obviously have pullbacks along the way. This pullback I'm talking about right now, Craig, is going to be equivalent to something like this. This was the 2008 stage 4. This is going to be the 2025 stage 4. So that's kind of what I see happening. And of course, then it's going to go up into the $3,000, $5,000 range. Who knows where that is? Depending on this correction and pullback, will allow us to use Fibonacci to target the next major super cycle leg up.
Let's remember, as we get to next month, because it'll be August to talk about that seasonality. You've shared that the last couple of years, the
Mhm.
seasonality of gold when we get into August and September. Let's wrap up though this month in July. We look at the silver chart. Very strong rally to end the week last week, really the first week of July. You know, silver, and I'm sure you know this, Chris, but maybe this was lost on some folks. Had its highest quarterly close back on June 28th, highest quarterly close since the end of December of 2012. Okay, which is remarkable. And you know, I think you'll recall, and folks will probably recall, gold finally broke out of its 3.5 year trading range at the end of December, and then took a couple months to go sideways, consolidating that, and then boom, you know, that caught everybody's attention on the long-term charts. Silver now, as of the end of June, has done kind of the same thing. So anyway, with that as a lead in,
Yeah.
what do you see on the silver chart?
Yeah, I mean, silver very similar to gold. Looking at this chart pattern, we've had this rally out of the COVID low. It pulled back using Fibonacci extension. It's saying, hey, here's the 618 level, which happens to be this
Mhm.
previous high. We more or less ran up and pulled back, and now we're just starting to try to break out of that, which is a good sign. We do want it to pull back and take a pause here. And 100% measured move says, hey, we should hit 36 dollars on silver, which brings us right up into these
Yep.
candle wick highs, which is the next major significant high. So there's still a lot of upside potential here for 20% or so upside for silver over the next, as you can see here, 1, 2, or 3 bars. So it's a great trade. I do think when it gets up to those levels, the stock market will be starting to really free fall, and I think silver will pull back maybe to where it is now, maybe a little bit lower. To me, that's going to be like the ultimate last opportunity to pick up on physicals. Because I think once the next major leg starts after this, recession and correction in the markets, silver, I believe, is going to go 50, 80, who knows after that. I think it'll be very explosive going forward. So short term, very bullish on silver, 20% upside potential. Long term, intermediate term, it could be back at this price, 6 months, 8 months from now. A year or 2 years from now, this could be 50, 80 bucks or
Yeah.
higher, right? So depending
I'm
on your
kind of,
outlook and your style, you need to look at it different views,
yeah,
expectations.
I'm kind of connecting the dots fundamentally. I think it's pretty clear from things like the Bloomberg Economic Surprise Index that the U.S. economy is demonstrably slowing. And there were articles this past weekend about the Fed maybe even cutting in the July meeting, not wanting to wait till September. I just wonder if the economy rolls over, the Fed begins to cut, everybody gets all excited about free money again, stock market pops, gold pops, silver pops, and then runs out of gas is what you're projecting
Right.
as the economy continues to worsen. It'll be interesting. You can sure see the connections of all these things. That's for sure.
Yeah.
Chris, you make these connections on a daily basis. Tell everybody about how they can find out more about the technicaltraders.com.
Yeah, sure. They can go to the technicaltraders.com. And I share videos just like you and I are doing. I cover all these different sectors, indexes, bonds, currencies, all those different things in the markets. And more or less, we just follow along with the trends. Everything I do with my strategy, my CGS strategy, I invest with my own money. I only trade ETFs. And you pretty much copy what I can do, what I do in my account. You can have it auto traded for you if you don't want to learn or follow anything. But the key is to understand when these waves are in the market, when we need to be defensive and move into something else and get back into the markets. And I cover precious metals and miners, all of those things. And there will be a time when we get very heavy into the miner space, but it's probably not till next year at the earliest. But other than that, yeah, you can follow along and learn from my daily videos and copy my trades.
And other people have noticed my friend Chris is beginning to make appearances on mainstream financial media. So if you're watching Fox Business or CNBC or wherever, BNN up in Canada, you may see Chris's friendly visage show up on your television monitor before too long.
Yep.
Chris, thank you. And again, I want everybody to keep Sprott Money in mind, adding that physical. My favorite hashtag is never stop stacking because we're getting into some pretty choppy waters here, geopolitically and politically. Sprottmoney.com should be your choice every time you're in the market. Call them up, 888-861-0775, and we'll have all kinds of content still coming at you this month. So be sure to like or subscribe to the Sprott Money channel on whatever media you are watching this stuff so that you're notified as soon as it comes out. Chris, we'll talk to you again in August. I look forward to seeing where we are then.
Sounds great. See you later, Craig. Bye-bye.
And from all of us at Sprott Money, SprottMoney.com. Thanks for watching. And again, we'll have more content for you as we head deeper into July.